All right, good morning, everyone. We certainly should have a 5x5 here, so let me know if there's any technical difficulties or whatnot. But I'm going to close the charts right now, and we're going to watch the much requested video. We're going to hop into one trading setup for life. Okay, you can see I already watched it. Okay, it's not a secret there. I mean, it's a good video. For those that are new here and you're not familiar, just understand that, like Vincent said, he's a fellow charter member. I started back in 2018 behind the paywall. Um, but the point of the matter is, right, I'm simply someone that is based on these concepts right here. Okay, not everything that I do is, directly out of this. Okay, a lot of it, you really come to some realizations that the psychological aspects and discipline, and there's just so much more to trading that goes into it that actually makes for trading success aside from the concepts. Okay, but this was my base and foundation. This is where I started. And from these concepts that I learned, right, I was able to build and create my own models, right, that make sense to me and work for me and just becomes part of my everyday system. So you couple this type of algorithmic delivery and study, okay, with severe discipline, amazing risk management above average, um, then you simply will find success. Okay, so anyway,
when I'm looking at my charts and I hear or see people in comments, I've watched other YouTubers, and their complaint is, you never really understand why ICT is picking this high or that low. He's hiding it from you. That's bullshit. Tonight, I'm going to show you that that has never been the
all
case.
right,
I've
show
always said
us.
these
Let's
things, but it's
go.
always tucked in during the discussion, the boring parts, because you're not trying to listen.
Yes.
It goes over your head. That's why when you go back and look at old videos, it's been there the whole time. But you're looking for that one trick pony, that magic trick, that sleight of hand thing is going to let you go out on social media and look like a rock star.
Listen, the magic trick, the magic bullet, whatever you want to call it, okay, all that is, right, is years of studying live data, forward testing real time, watching live price, watching how it books, delivers, noting it down, and just going through years of trial and error. After that, you get beat up a little bit, right? You get that humbling experience that every successful trader has ever gone through, right? And then you have yourself the magic bullet. That's the true holy grail.
If you want to be able to do that, you have to learn like tonight. This is a lesson that gets to the heart of the matter. Where is it that you should be framing your focus? And what liquidity? What specific liquidity does ICT refer to? Yes, we're going to cover that. And you're going to see, by contrast, if you look at the things I'm going to cover tonight and utilize it with this resource here, Bookmap. I don't know if they offer a free trial. I don't know that at all. But there's YouTubers out there that stream and kind of like share this because they're affiliates and they want you to sign up with them. I'm not saying don't use it. I'm not saying for it's
Okay,
the
it
heart of
sounds
the
like a
matter in terms
rant's
of
coming on.
talking about.
Here we go, here we go.
All right, so when we first start talking about liquidity, the assumption is you're a day trader, whether you're a scalper, whether you are a session trader, a intraday day trader where you're trying to do the entire daily range, or if you're just a short-term trader or you're looking to time the market for your longer-term swing trade or position trade. All of that is encapsulated in tonight's discussion. So it's not just an intraday chart concept. You can use these concepts to really narrow down the amount of risk, reduce it to minuscule amounts. It doesn't mean it's without loss. It doesn't mean that you will have winning trades all the time. It just means that if you understand the concepts I'm covering tonight, you will have the ability to go in and fine tune your risk model, be able to reduce the amount of risk that's associated with your trades, and also time the market. Know where the market's going to go to next. Okay.
Yes.
First session we're going to talk about is the PM session ranges. Okay, and this is always going to be referred to in terms of previous day. Okay, so previous day, we are going to be referring to the 1:30 p.m. to 4 p.m. time window, and this is always in New York local time. Now, I'm saying that because I want you to set your trading view chart to New York local time. I say this as much as I can in all my lectures because I get confused when I talk to people around the world and you're in different time zones, and I have made mistakes, but all the confusion goes away. PM, and it's very simple, succinct, right to the point. And we are trading this example here. I'm using the June contract before rollover took place at the time of this recording, and live stream, we are looking at the September contract for the indices for 2023. But I'm showing you an example because this is something I utilize.
Also, guys, don't be confused. I'm only saying this because I was confused when the first time I watched this, years back, whatever. This is on a regular trading hour chart. Okay, so this is the previous PM session buy side liquidity from the day prior to this day right here. So this is a previous daily PM session buy side and sell side liquidity. Okay, on a regular trading hour chart, not the chart that we're usually on. Okay.
In commentary, something I use in terms of my own analysis and executions and such. But I want you to understand that when we look at PM session ranges, it is always referred to in regular trading hours. Notice this down here in the lower right-hand corner. Let's make the chart a little bit bigger. So down here in the right-hand corner, the RTH, that's regular trading hours. Now you can toggle this if your membership permits you. I don't know what, I guess, membership is required for TradingView. If you're absolutely against TradingView, then I'm sorry, you're gonna have to find MT4. So we're all here now. Money for it if you subscribe to it. And I don't know what, give me the liberty and latitude to be able to talk freely, and you're gonna have to work trading hours, ETH. Okay, one or the other is gonna be utilized. If we're gonna be looking for PM session ranges, it's always gonna be into previous day. The time window, the amount of time that you're looking inside of, what price range, what high are you looking at ICT, which low are you looking at ICT, regular trading hours, it cuts out all the overnight trading. The algorithm, once we start trading regular trading session hours the next day, it's going to refer back to these specific times.
Yes.
And what liquidity exists above and below it. So if we're bullish and we're trading near the opening in this little orange line here, that's going to be in every slide. That denotes the 9:30 opening bell. You know, when everybody's on CNBC and they clap their hands. That's when the opening bell occurs for the stock indices and stock market. Now, obviously, they're trading all night long, but that opening window starts that opening range for the next 30 minutes. Where will that usually run for? The higher level. If you're bullish.
Joe, yeah. Yeah, we do trade on electronic trading hours. Okay, but what you do is you don't actually have to do this. Like you don't have to incorporate everything into your trading, of course. But a really good way to find really good liquidity pools, like just more easy, it's just by flipping the regular trading hours and viewing it this way. Okay, because a lot of times what you want to do come to 9:30 opening bell is just I'll let him explain it. Okay.
And we take out the PM session low, where it's going to be sell side below that. That's wonderful, because if it's bullish and we have a higher time frame premise that's expecting the market to go higher, how do we know that? That's what I've been teaching you. When I do my reviews or I do my commentary, or if I'm pointing to something on Twitter, if you're not following me on Twitter, you're really missing out, because I'm doing a lot of then and there. Today I did it, and I want your attention to it so that way you can study real lows. Notice that this low here and this low here, that's encapsulated inside of the 1:30 to 4 o'clock. Yes. New York local time. So below those relative equal lows, there's sell side liquidity. It's really simple. It's simple, isn't it? When you go through the process of listening to me and doing the things I tell you to do, and I justify why you should do all these things, that's the boring parts. The folks that have started making real money, 6 figures, payouts, okay, doctor salaries in a month or less, that stuff comes by listening and practicing and going into the charts. And not taking my word for it.
I can attest to that. I'm not making a doctor's salary. Okay, I'm making a humble salary, but yeah, I can agree with that and say he's correct.
Seeing if the things I'm saying are indeed true. This logic, if we're bullish, we'd like to see sell side taken. Why? Because that means that smart money would accumulate those sell side liquidity and absorb it for their buy side. So they're going to treat that sell side as counterparty to their smart money buying. So they're accumulating in the Judas swing. The drop down here just goes into this area here where the liquidity is. So we definitely want to be looking at previous day's session, not just any old high and low, the high and the lows between 1:30 and 4 o'clock New York local time. That's the PM session. That range, the highs and the lows, there's liquidity above and below it. If we're looking for higher prices, we definitely expect it to be running to the buy side. But at the opening, we expect, not always, but we anticipate a run lower. That Judas swing, that every Tom, Dick, and Harry on social media are going to chase that. They're going to think it's breaking the new lows and it's going to keep going lower. No. It's only running down there to take sellers in the marketplace, and they're going to buy them. And then the market runs to buy side. Now, you could be a trader that simply takes this order here as a long, as a turtle suit. Now, admittedly, this takes a great deal of conviction.
Romeo.
It probably won't be the first thing you reach for learning from me. In fact, it took a lot of time for me to trust that idea of buying below old lows and selling above old highs for entries, not targets. It's easy to do it for a target, but it's entirely different. It takes an entire paradigm shift in your thinking to go into the marketplace and anticipate that as an entry. But it can be done and it takes time. How you get there is you study old moves like this and you journal them. But your model could simply be wait for the sell side in the previous PM session range. If you're bullish, that's your buy. If you're going in, that means that you're expecting the weekly range to expand higher. The draw on liquidity higher on the weekly time frame. We covered all that stuff in the previous discussions. But going down into liquidity like this when we're bullish, we would reasonably expect it to run for what? The buy side. Where? What buy side? What high are you looking at, ICT? That one right there. Why? Because it's inside the range between 1:30 and 4 o'clock. How, pray tell, is that complicated? It's not complicated. And I've taught this ad nauseum over and over and over again. But you're not listening.
Since 2016.
So I'm taking you by the hand tonight, right into the charts. That way everything is perfectly laid out for you. You have absolutely zero excuses. You have no excuses now to know what I'm anticipating. What range am I looking at? If you can't, okay.
So I will say, all right, one more thing that I want to add in. Okay, as we're watching this, like it's like really good stuff. I mean, it's very, very simple. There's like, don't overcomplicate it as you're watching it. Like, that's a big mistake I see a lot of people make. Previous session highs and lows, very self-explanatory, right? But the real important part is, I'll touch more on this later, is waiting for the setup to actually perform, knowing what day it should be that clean, right? So let's continue.
Going further into the day, now we're considering a full 24-hour rotation. Okay, so over the course of 24 hours, what is the mind of ICT? What are the inner musings of Inner Circle Trader? I'm going through the process of going through this very routine right here. I look at PM session range. If it's not a factor, or it's not to be considered because we're not in close proximity to that range, because we could be significantly higher or lower around 9:30. So what am I looking for then? If I'm not close to previous PM session 1:30 PM to 4 PM range, at the time of 9:30 at the opening bell, and I'm watching that next 30 minutes, which is the opening range, what am I going to look for then next if it's not that? I'm looking at the London session raid. That means I'm going to be looking at the range between 2 o'clock in the morning and 5 o'clock in the morning, New York local time. Now again, tell me, is that complicated? No, simple. So in your charts, you want to be annotating what those levels are. Now you can do it like this here, where I have actual annotations that I hand draw. I don't have a indicator thing that plots them for me. I prefer the high touch over high tech. It means I'm putting some thought into it. I get closer to the marketplace by doing that and sharing it with you. I just don't trust an indicator to do it. Okay, so I'm an old guy, I'm a dinosaur, and it's a cop art. But let's zoom this in here. All right, so London session raids. If we are not in close proximity to the previous PM session at 9:30, remember, this orange line here denotes the 9:30 opening bell of the stock market. So where are we at in terms of proximity? So we're starting the trading here.
In a premium.
So where are we? Are we in close proximity to a PM session high or low? But we are in close proximity to what? London session buy side. We're digging into that. So all of this can be viewed pre-9:30 as a Judas swing. Now notice, am I showing you regular trading hours or electronic trading hours? Electronic trading hours. So that way you're going to be able to see the overnight trading. If you have it toggled to regular trading hours, you won't see this information, folks. It will be hidden from you, which is one of the conundrums that retail traders fall into. They don't know either how to toggle electronic trading hours or regular trading hours. And even if they do, they don't know what to do with the information. It's hidden. It's in plain sight, but it's hidden from them. You don't have that excuse anymore tonight. So London session, buy side liquidity, we're seeing that raid up into it here. And then, where's the low in that? Remember, 2 o'clock to 5 o'clock in the morning, New York local time.
Some pretty high resistance delivery.
What is the range? The highest high and the lowest low.
Yes.
Here and here. So if we raided the buy side and we did it on a run that's a Judas, we anticipate that as a false run higher. And then we're going to see, does it shift lower? How can we use that information? Well, you can use the 2022 model. You can use a breaker, bearish breaker. You can use the ICT optimal trade entry. In here, from this low to that high is a fair value gap. This is a shift in market structure below this low right there. That's your 2022 model or optimal trade entry. What would you be aiming for?
London low.
London session, sell side liquidity. Do you have to sit through a retracement? Yes. But we'll cover that because that in itself is also a range that we utilize intraday. Notice when I'm taking you through the whole routine of 24 hours. Where are we at open? Open is 9:30. We have to wait for 30 minutes because there's going to either be a run higher or lower, or it may consolidate, and then we'll have to wait for the 10 o'clock displacement, and then you can look for a silver bullet between 10 o'clock and 11, or you could use a run into the lunch macro, which we won't talk about tonight, but I promise you I will be teaching those things. I can't do everything in one lesson. Everything, line upon line, precept upon precept, it'll be taught here and there. But before November, you'll have more than you'll ever need. So we have two ranges we've identified here for defining where liquidity is. Let me go back to the discussion of that Bookmap application or software. I want you, if you have availability to do this, look at what Bookmap is saying when we're trading like here. Tools like that will start showing you lots of liquidity, if they're accurate, right below that low. If it matches the premise that I'm teaching here tonight, then it's valid. And that's where the market will draw to. Every small little liquidity above the marketplace or below the marketplace is irrelevant. When I say I'm looking for a draw on liquidity, I'm looking predominantly around the levels I'm teaching you today. So think about how many times I've called things on Twitter live and how many times they were wrong. What, 3 times maybe? If everything's on Twitter, it's not deleted, it's not edited, I don't do anything. I'm doing it. It's what I'm teaching you tonight. You can do this, folks. Now, there are going to be times when you look at the market and it's not going to be clear to you. I'm living a life. So if it's not clear to you what it's reaching for, don't put a trade on, study it. And that experience will grow over time and you'll get better at doing it. But when you're journaling, I want you to go into your charts and journal like this. This should be part of your journaling. If you don't journal and you don't record these types of things, your brain and your subconscious can't retain it. It needs to be trained and conditioned. That way it activates your reticular activating system. So that way it allows your mind to see it. And then when you're looking at price action live, it'll be like, oh, I got to look. Oh, there's that high I'm looking at. There's that low I'm looking at. Notice we're cutting through candles, folks. It's not supply and demand. And it's not Wyckoff. I'm sorry. I wish it could be something I could point to and say, go over there and learn that. But it isn't anywhere else. All right, opening range gaps. Okay? Opening range gaps.
I would say most of this stuff is like a lot of you guys in here like already know this type of stuff, like the basics with previous session highs and lows. Now this to me, when I watched this back in 2023, this was the really, really the part that I found interesting, and just one thing that I incorporate into the Model 3 that we do trade, targeting these opening range gaps. So I'm going to click play here.
Are a specific event that takes place when you're utilizing regular trading hours. So let's zoom in. So down here in TradingView, you want to make sure you're toggled to regular trading hours. By doing that, what it'll do is it'll remove all the overnight trading, so you won't see anything like London or anything like that. Where we stop trading for the regular trading hours, and where we start trading again at 9:30's opening bell. That's what you're seeing, okay? That separation, that is my opening range gap. So whenever you hear me say an opening range gap, not to be confused with opening range. Opening range is the first 30 minutes. I will have a specific teaching in its entirety, all by itself on this video, on this channel. It'll be opening range lecture. But when I say opening range, that is the first 30 minutes after the opening bell at 9:30. So specifically, it's 9:30 a.m. New York local time to 10 a.m. New York local time. Not ambiguous, is it, folks? Very, very specific. This opening range gap is where we stop trading using regular trading hours and where we open up at 9:30. If there is a gap lower at 9:30, you will see this gap here. It's being shaded with this little orange box. It doesn't mean it wants to run up there immediately, okay? And this is what I watch a lot of YouTubers that understand there are gaps. I didn't invent a gap, but I did codify some things around how to use that gap. And I'll teach more about that also in its own lesson. But tonight, I want you to think about where the market reaches for liquidity, where it reaches for that liquidity, and where does it want to go to after it goes there. This low over here, right in here, that low is occurring in the morning session or the AM session between 9:30 and noon. So what would be residing below that? Sell stops. So we call that sell side liquidity. So we gap lower and then run into that liquidity right there. Perfect. Using regular trading hours. Now, if you're using electronic trading hours, you may have a lower low overnight. And then, in other words, between these two price points here, where we closed at regular trading session and open at regular trading session, between those two price points, you have all of the 6 p.m. to 9:30 in the morning worth of trading that could have made a lower low here. Mm-hmm. I don't care. What? I don't care. If I'm going to refer to the opening range gap and we get a gap lower like this, I'm filtering out all of overnight price. That's it. Now, is that ambiguous? Is that complicated? No. What low would I be looking at? Well, on regular trading hours on this chart, that's a pretty obvious low, isn't it? That's the stuff I've been doing on Twitter. I'm picking the right highs and lows, folks, because there's a method behind what I'm doing. I'm not inventing it as I go. I'm not going off on a whim, making up as I go. I've been doing this stuff for 30 years. It's the same stuff all the time. It's a well-read novel to me. That's why I'm so consistent. That's why I'm accurate. And if you stick to these rules, you will become this accurate too. It's transferable.
Yes, sir.
You should be excited. I know some of you are grinning like shit right now. You're thinking, man, if I would have had this stuff just a couple months ago, I could have passed my funded account challenge. I could have done this. I could have done that. I could have bought a boat, a jet ski, a car, a down payment on a house. Mm-hmm. But you have to go one step at a time. Now, the opening range gap. If we run to a pool of liquidity like this, here, wouldn't it make sense, since we're now into a discount and inside of liquidity, below old lows, we're in sell side now. We've already moved a lot from the previous session, here to here. What would be reasonable? Well, look at the economic calendar. Today we had the Fed Chair Powell jawboning at 10 o'clock in the morning. Do we trade around Powell or Fed Chair testimonies? No. Not if you're new. Not if you're trying to keep your money. Not if you don't want to be a gambler. You wait. And you wait for what? The PM session. Exactly what I said this morning on Twitter. I said today and tomorrow, Fed Chair will be testifying. Abilities are going to be high in your face.
By the way, guys, this actually pertains to today. I told you guys why I'm not posting any live trades at all today. We came off a large range into a higher time frame key level on Friday. And now we're coming up into a Monday up off of that, right? So anytime that's a factor, usually you just want to live fund sit it out the entire day. Okay, but I will say it's very likely that the PM session will create something like this that he's about to show right now, actually today, okay? And not be so great in terms of price delivery in the AM session, okay?
Favor if you wait till the afternoon. That means 1:30 in the afternoon, New York local time, to 4 o'clock's close. Is that ambiguous? Is that complicated? No. Wouldn't you know it? There's a low here. It forms at 1 o'clock. And then at 1:30 or so, it creates another low here. That's pretty interesting. What happens after that low forms? It runs right on up into that opening range gap. So all of this mess in here, every Instagram trader, every Twitter hero, every YouTube trader, live streamer, they're in there trying to look for patterns when there is nothing to trust. It's going to be running around, going amok, just seeking liquidity, and it'll frustrate you. That's the reason why I tell you to focus on the sweet spots in the marketplace. I don't care about retail Rick that's going to come after the fact, because he's not going to tell you on Twitter when I'm tweeting and saying, oh, you said don't do the range gap. After the New York lunch, after the morning session chop, and it runs to a logical level based on the information I'm showing you here. See, in the morning, a lot of folks that understand this gap exists, we're looking for any reason to run right up there then. No, they're not going to see it. Why? Because they don't understand time. The algorithm runs on time. It engineers liquidity in the morning session, and then it engineers it going into lunch, and then it runs on that liquidity. Why would they want to do that? We'll talk about that. New York lunch raid. Now, in the old days, and I was trading when the old days were a thing, before electronic trading, we had open outcry pits, and when you called into the broker, they would answer the phone. You had to wait for them to answer the phone, by the way, and then get transferred to the trading desk that you are seeing the account managers for that account you have, and you got to go through the process of giving them your account number and then your PIN, and then you got to give them your order. They repeat the order the whole time the market's trading. Then they ask you if you want to wait for your fill. And if you say, I'm going to wait for my fill, you're put on hold for a minute or two. Then they come back and they tell you confirmation number and where you're filled. And many times you're upset because you have real slippage. Because you're all spoiled. Press a button, you're in there, right?
True.
And the open outcry in the pits would have a lunch hour where it was very, almost like a routine. Unless it was a big trending day, the lunch hour between noon and 1 p.m. New York local time would generally be a consolidation. Now, the way we could use that back then, and I'm going to show you how I use it now, but for historical purposes, I'm giving you a reference on how I become ICT. The lunch hour many times was a reversal, and whatever took place in the morning was completely reversed on, and then if it was a trending day, it would just keep on going, and it would repeat whatever the morning low was up to lunch high, and then run into 3 o'clock, 4 o'clock, and that would be their full daily range. Other days, if it was bullish, it would go up, and then consolidate during the 12 o'clock and 1 o'clock in the afternoon, and then do the same move in the afternoon between 2 o'clock and 4 o'clock that it did in the morning session, but it would do it in half the time. So it was a measured move, ABCD type of profile. And in other days, you would see just a morning move and then consolidate lunch and then stay consolidated the rest of the day. And the same thing if it was a bearish day, it would create the morning move, then consolidate in lunch and do nothing extra. And that was pretty much it. That was the profiles that existed back then. Now, you might be thinking, well, that's all well and good, Michael, but which one do you use? Well, which one would you expect based on the economic calendar, the draw on liquidity for the weekly range? What is it trying to do? Where's it reaching for? All those things have to be balanced. That still requires you and your study to get to that degree of understanding and implementing the things I'm teaching. But you have no excuse when I'm pointing to it in advance. I'm taking you to the higher time frame weekly charts. I'm telling you where the market's going to go, and we watch it daily and weekly move thousands of points. Not 5 handles, thousands, hundreds, okay? So it gives you time and opportunity to get in sync with that type of move. And you don't have to have the lowest low and the highest high. So a New York lunch raid between noon, New York local time, to 1:30 p.m. But ICT, you just said it's an hour long, noon to 1:30. And there's people out there say, oh, the market doesn't care about, nobody's going to lunch. The algorithm doesn't take lunch, but it runs on that liquidity. So everything that was utilized since the dawn of market manipulation, when the powers that be figured out that they could just run a numbers game, and everybody thinks it's a free market, and they think it's buying and selling pressure that makes these markets go up and down where they go. They utilized that information that was not efficient at all when it was used in open outcry. And that price, that manipulation, that engineering of market direction was made much more efficient when electronic trading took over. So nothing has changed in regards to market manipulation and market making. I'm not talking about dealers, folks, okay? If somebody's out there saying, I'm a market maker, I'm a former market maker, you are not a market maker. You are a dealer. The folks that are in control of price, where it's going to go, how high it's going to go, how low it's going to go, that's who I'm talking about. And you don't see them, they don't have a face. All of that's been changed now, and it's algorithmic. It's highly efficient. They never get sick. They never mess up because it's 100% electronic. It's following code. It's following instructions, period. It's all delivered on time. So a lunch run on liquidity, a raid, if you will, you have to define the range between 12 o'clock and 1:30. But you said it's an hour long. 1:30 starts the PM session. That's when the algorithm can start doing its macro. A macro is a short order of instructions that will create an event in price delivery. Your focus needs to be on the highest high and the lowest low. I'm showing you the highest high in 12 to 1 o'clock because there's nothing higher than the high here. The low formed here between 12 o'clock and 1:30, that's the lowest low here. So we see this low, it drops down there. If we're expecting price to be bullish and it's not done anything in the morning, Powell's talking, there's a afternoon event that's expected like FOMC, something to that effect, you avoid the morning session. Let everybody else chase everybody else's opinion and ignorance on social media. Everybody's looking for the guy with the hot hand, the guy that's doing all the trades, the guy that knows, or the gal, in deference to the ladies that do trading. They're looking for the people that have something to say about the market right now. And if they've been right in the past, well, damn it, they're going to be right today. These members be chained to the. You have to do all these things on your own. Session low for lunch hour.
Here we go.
Well, I guess it's really technically 90 minutes, isn't it? Did you say 9 minutes? Oops. The low here, we can see it running down, taking that. When we're expected to go higher. What do you think exists up here that's not being noted on the chart? We'll get back to that. The market starts running 130, completely random. Now, you're probably watching this video and you've never seen anything else by me or never listened to Twitter Spaces that I've done. And you don't know that I've said that time at 130. You don't know that I've said this many, many times, referring about the New York lunch and how there's an algorithm that controls price. And there's a macro that begins at 130 that sets the tone and pace for the 2 o'clock to 3 o'clock silver bullet, baby. The dots are starting to connect, aren't they? Starting to see a little bit more of the tapestry that's eluded you and everybody else out there that doesn't believe there's an algorithm, doesn't believe that these markets are absolutely controlled by AI. I promise you, that's exactly what's going on. We want to see when we're bullish, the market drop down and take out the New York lunch lows. Even if it's going to reverse. You can trade that.
Yeah, that's all you need.
Here. How can you trade that?
Previous session highs and lows, guys. I mean, it's really straightforward. Okay, I mean, if it consolidates in the AM, that's why a lot of times I wait for the lunch macro. Okay, and actually, yeah, 1250 to 110. That's one of the trades that we took live in the chat last week, actually. But anyway, point is, right, when you strip it down and simplify it, really all you need is previous session highs and lows, right? And you use, for example, lunch sell side as a catalyst for your long trade, and you get out lunch buy side, right? You don't need huge moves, huge reversals, and all that stuff to make money. If you pick up on something like this consistently, right, and know when to look for it, that's important as well. Then obviously you can do very well for yourself.
Yeah. Wait for a shift in market structure. Fair value gap. Don't trust the 5-minute chart. I've already shown you today using a 15-second chart. And we'll get to that too. What do you say? A 15-second chart. Yes, friends and neighbors. Price is price.
All right. Also, that's another thing. Like, okay, another example of why you shouldn't hang on to every word and think for yourself as well and derive your own models. Okay, I'm profitable with the 5 down to the 1-minute entries, right? There's absolutely zero reason for me to go down to the second chart other than, trying to be significant because everyone's on the second chart now, right? So that's something that I never will implement in my trading, and there's no need for me to go on the second charts if my system is already profitable on the minutes, right?
And you have to look where the inefficiencies are. And every retail trader is using a 15-minute chart, an hourly chart, a 4-hour chart. And there's this taboo around 5-minute charts or less because they're not informed. They're not initiated. They think it's noise. They're part of the Goldman Sachs cult. Sorry, boys, but price is price, and whatever you see in terms of
nothing's better than the 1 minute.
Using a time-based chart, you have every advantage using a time-based chart. In fact, that's the only way you're going to see it. So don't listen to people that say, don't look at the time-based chart. It's nonsense. Wrong. Right away, that tells you they have no idea. Algorithmic delivery, it escapes them. Sorry.
Agreed.
It runs on time. Time is the first factor. What am I showing you here tonight? Very specific windows of time and what to reference it in terms of liquidity. Go back and look at my examples, folks. Your jaw's going to hit the floor. It's always been there. You can wait for a run up into the opening range gap, take out a lunch buy-side liquidity pool, and then watch and see how it trades back below the New York lunch high. If there's a displacement, what does that mean? See that low right here? Displacement. What does it leave? This candle's high and that candle's low. What is that?
Perfect.
It's random. Look at that. It's like it's just, it has no rhyme or reason, right? Wrong. That's your 2022 model.
See how it all comes together here, though. Like, what do we preach every single time I'm on with the PM session stream with you guys? Right? This kind of brings it all together here because, right, you're utilizing that previous session buy side liquidity because we ran out above after one. Why do I always tell you guys to wait till 1:30 p.m. to trade PM session? Sometimes things happen a little bit before, right? For example, here the long would have took place at 1 p.m., right? If you're trading one setup for life with the lunch sell side buy side liquidity as a scalp, right? But aside from that, I always tell you guys to wait till 1:30 p.m. because that's when the real easy move is likely to ensue. And at this point, right after 1:30, what do? We kind of use it like a 9:30 Judah swing, except it's the PM session kill zone. Run up above 1:30 p.m. opening, clear lunch buy side liquidity, and then you wait for that displacement up. Here's a fair value gap. And another thing you can add to your tool bag is you want to see real good displacement below, back below an old significant high, and that's what he just explained, right? That's another little thing that you look for, a real strong breakdown through that old significant high once more, in the form of displacement. So 1:30 opening price, we offer price above that in a premium lunch buyer side liquidity that's very significant, previous session high rated, followed by displacement for value gap. And I mean, this only works if the higher time frame bias is bearish, right? So if it's bearish, right, then this is a no-brainer sell.
Sell short. Aim for what, ICT? The New York lunch low. But ICT, look, man, there's some relative equal lows down there, and you teach relative equal lows, right?
Oh shit, he's talking about me. All right.
But before you get there, where's the next logical range to look for in terms of liquidity? That lunch hour or 90-minute period. AM.
So recap, basically you're watching from 12 to 1:30 p.m. where you would hunt, like if you're, when it makes sense, basically usually whenever we have an AM session consolidation, right, we you should have written in your notes at least one time, when we have an AM session consolidation or a quote unquote chop, right, a lot of times a one setup for life will typically take place with the utilization of 12 to 1:30 p.m. highs and lows. Okay, so definitely very good stuff there.
Session ranges 9:30 in the morning to noon. So right away, we are considering this in the afternoon. So we can always refer to it in the same trading day. So we could be anticipating a market reversal profile, something to that effect. If we have an elongated market where, say, the New York session, morning session rather, of the current trading day is consolidation. And then we have a directional lunch hour, or during the lunch hour, it's consolidation as well. We can refer to, and if we're bearish, we look at the previous session's trading. Now, if you look at the previous session and you're using electronic trading, what specific low am I looking for? I'm looking at the 9:30 in the morning to noon. If I'm not going to look at the PM session range, remember I'm taking you to very specific pools of liquidity. I'm going to look past the PM session. Well, why would I do that? Because we're already trading below it over here. So would I refer to it for sell side? No, we're already below it. So if I'm bearish, what am I looking for? What low am I looking for? Which draw on liquidity am I looking for? In this regard, I'm using the AM session sell side liquidity. If I was bullish, it would be everything I just said here in reverse and opposite. I would be looking for the buy side. But if we're bearish, I'm looking for very specific pools of liquidity. If I showed this on regular trading hours, it would still get that low. Very important. Even though I'm showing you down here, the electronic trading hours, I'm doing this for the sake of showing you an understanding that whether your chart is on regular trading hours or electronic trading hours, and I'm looking at the previous daily range, or if I want to trade below yesterday's lows, what low am I looking at? The PM session low or the AM session low? Very, very specific. Not ambiguous. Not, well, I don't know which one he's looking at. He's always changing shit around. No, I'm not. It's always the same stuff. Always the same logic. Always the same logic. What's changing is the profile that I'm operating in because the market's delivering a specific way, and I have to adapt to that. And then I anticipate. I'm not reacting to price. I'm anticipating where it's going to run to. What does that mean? Everything I'm teaching you tonight. Now, I don't expect you to watch this tonight and walk away feeling like you know everything about what I just said. You're going to need to watch it a few times. And if it's something you don't want to do, you won't learn it. I promise you, you won't learn it. One time watching it ain't going to work. You need to listen to what I'm saying in here and then go into your charts spend weeks and months going back through it. It's not made up. It absolutely will not stop. So you can see the previous AM session low over here, sell side liquidity. This dotted line here denotes we're looking at the 20th of June, 2023. So I can't use the afternoon session high and low because we've already, starting at 9:30, we're already below that. So what am I looking for, ICT? What am I supposed to be looking for? That low. It doesn't matter if it was a lower low, okay? Listen, if there was electronic trading hours showing and it had a lower low and it went below that low here, I would still, listen, I would still refer to the PM session range, as I mentioned a little bit ago in this presentation tonight. And before that one, I would go to this specific range here. It's a specific time. I don't care about overnight highs and lows. I'm looking at very specific regular trading hours. Regular trading hours is going to be referred to in the next trading session. They're either going to be respected or blown out. It's simple. It's not hard.